Hi everyone, this is Devins Financial Stock Analysis Weekly Newsletter. Today is January 11, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's look at current market trend and our strategy. US stock market remains in the uptrend. China stock market pulls back, although the uptrend is unchanged. My plan is focus fund on the strong sector ETFs and stocks. Let's take a look at the US stock market index charts. The first is the daily chart for NASDAQ index. NASDAQ had started year with a gap up, and right now for the past 2 weeks, there's no sign of a high volume selling. So the index is in the uptrend. Gold index daily chart. Gold is in the downtrend. SP 400 mid cap index weekly chart. Mid cap index has broken out from the 2 years consolidation, 2 years triangle. This is a bullish triangle. It broke out, and from mid to long term, this is very bullish. Small cap 2000 stocks form this index. This index also broke out the 2-year consolidation. It's a kind of like a triangle as well. It broke out above. That's very bullish for the market. Silver index daily chart. Silver is in a downtrend. SP 500 large cap index. Large cap is still hasn't broke out from the high yet, but it's nicely to say this is in the uptrend. Shanghai Stock Exchange Composite Index daily chart. Shanghai Index has already reversed the 2-year downtrend. Now it's in the uptrend. Last week it had a big pullback, but still in the uptrend. US dollar ETF is in the downtrend. Crude oil index daily chart. Crude oil is making a base right now. Short term, it reversed the previous downtrend, and the technical point of view, short term is in the uptrend. GDX is a gold mining stock ETF. This ETF is in a very strong downtrend. And right now, I'm looking to see whether this index can reverse the downtrend and going up. It hasn't happened yet, so it's still in a downtrend. IYR, US real estate ETF, and this is in a downtrend. It may break out from here. This will be a cup. XLE, that's also making a base here. XLF is a very strong uptrend. It broke out from the cup base right here and it's going up. XME, metals and mining ETF, is making a base here. All the commodity sector is bottoming out. I'd like to share with you about one stock, ARM Holdings. I think ARM Holdings may be the star stock for this uptrend. It's riding the tablet smartphone trend. Almost all the smartphone and tablets are using ARM Holdings technology in their CPU. ARM Holdings does not make CPU chips, but it is behind Apple's iPhone, iPad, Google's Android phone and pad, Microsoft Surface. They all use ARM Holdings technology in their CPU chips. And those companies who make CPU chips will pay loyalty to ARM Holdings. Intel is ARM Holdings' competitor, but is a distant second place competitor. And ARM Holdings has a very strong fundamental, and in terms of earning growth, it's very strong. It also has a very strong technical from price and volume action on the chart. The only problem is ARM Holdings the price is too extended. One should wait for the pullback to major average before buy it. Let's take a look at ARM Holdings weekly chart. ARM Holdings has gone up 10 times between 2009 to 2011. Among those 2 years, the stock price went up 10 times. And that tells you this stock's characteristics. If it's in the uptrend, that uptrend can last 2 years here. And then it spent the next 2 years make this base. So between 2011 to end of last year, the stock price didn't go anywhere. It oscillated between $20 and $30. Then last year, October, it broke out with a very high volume here. This stock broke out and never looked back. It just kept going up. It had risen from $30 to $40. Take a look at the daily chart. And breakout point is right here. This is a pivotal point, 29.29. But the stock gapped up with a very high volume. And yeah, for the gap up, you have to forget about that. For 5%, you may not be able to buy within 5% price range from the pivotal because a stock gap up. Then you just have to, buy there. Anyhow, the stock goes up along the 10-day moving average, keep going up. Right now it's very far away from 10-day moving average. The chance is very high for the stock to pull back toward the 10-day moving average. That probably be a point that I may add some more shares. I'd like to share with you about a strong sector, U.S. mortgage service sector. It's not mortgage sector, it's a mortgage service sector. That was the strongest sector in the year 2012. There are three stocks are very strong, National Star Mortgage, WAC, and OCN. Let's take a look. National Star Mortgage Holdings, NSM, it broke out from the flat base, IPO flat base right here, and went up. And then the end of last year, it pulled back and making a base here. It came down pretty hard with a very high volume. That's an institution selling. So when you see something like that, you should sell. And then it spent next over 2 months, made this base. Now it broke out. Here's a breakout point. Volume is very high. So this is a cup without handle breakout. OCN also went up a lot. Then it had a big volume selling. It spent almost over 2 months, made this flat base. And this you can see it's a flat cup with a handle or saucer type of thing. And it break out right here from the handle here, very high volume. And it may pull back up and pull back down again, and that may create another buy point. It create another buy opportunity for the same buy point. WAC, Water Investment Management. This is also a mortgage service stock, and has a very strong uptrend, and spent over 2 months, made this cup with handle base. This is a breakout point, very high volume. So it just pulled back for 3 days, and today it bounced back up. Like to share with you about one stock that's currently near the buy point. First of all, what is a buy point? When stock break out from a base with a 40% higher than the annual average volume, that is a breakout point. The breakout pivotal point, that's our buy point. And buy range is within 5% of breakout pivotal point. So never buy a stock that is 5% higher the pivotal point, except the gap up, of course. And target price would be 20 to 25% higher than the breakout the pivotal point. That range, if stock goes up 20 to 25% after you bought it, assuming you're buying at the pivotal point, you may consider take profit and get out. And stop loss price is 7 to 8% below the breakout pivotal point. So if you buy at the pivotal point, if the stock go down 7 to 8%, you should consider a cut loss and get out. LinkedIn is a stock that's currently near the buy point. Let's take a look and its chart. First of all, look at the weekly chart. It's making the cup break out from there, but make another cup with a handle. Break out here, make another cup with handle. So it's making base on base. Daily chart. This is a cup with a handle. Break out here, and then make another cup with a handle. This is a handle. This is a recent handle. Yesterday it broke out from here. That's a 116.97. That's a breakout buy point. and this volume is pretty high. So this is a stock is currently within the breakout buy point. That's all for this week. See you next